Hey traders, Clifford back with another video on how to trade the index and part two of how to trade the commitment of traders report. In the last video, we went over what the basics of what the commitment of traders is and how to identify positioning a little bit. Today, we're going to go more into detail on that as well as how to actually, interpret everything the report shows and how it can benefit your trading. So with that being said, let's get started. Okay, so in that first video, I kind of went over how to set up the indicator. And just to review, I created a template. If you didn't see that one, definitely check out that first video because I walked through how to set up the entire indicator. And basically, you end up with something like this, showing the net positioning. So, but just to clarify, for those who don't know, how do we get the net positioning, right? So we got remember the report, just to review, has three types of traders, right? You got the commercial traders, which are the red ones, the non-commercial or the large speculators, which are the blue ones, and then the non-reportable, or we call them the small specs, which are the yellow ones. But how do you actually get these numbers? Well, basically, just going to show you real quick. So if I put large speculators long, large speculators short, let's focus on the blue ones, right? Basically, every report has a positioning of long and short positions, right? And so for example here, let's see what we got here. Let me fast forward. Okay. So for example here, if I turn off the net positioning for a minute, let's just let's just turn this off for 1 second. Okay. How do we get the net positioning? So you see this number here is this is the long side, right? And this is the short side. So basically, you got 13,000 contracts long, and then we're just so you know, I'm looking at the US dollar, but you got 13,000 contracts long, and then you got 18, 19,000 contracts short. So the difference between the two equals the net positioning. So now you don't need to really, I mean, technically speaking, you don't really need to know the long and the short as long as you got the net because the net is the difference between the two. So let's turn off the long and the short and just put back the net. So now you can see why we get a net positioning of negative whatever it is here, negative, look at the blue one. See the blue one? Remember, red is commercial, blue is long specs, and yellow is small specs. So we look at the blue one, and you get a net positioning of negative 6,000 contracts. So what does that mean? That means whoever was long, whoever was short, there were more short than long, so they became net 6,000 short. That's basically all you need to know. Now, so you got your net positioning, right? And now you got the zero line. The zero line is neutral. That means if you see like a zero positioning, like here, this means they're neutral. That means the positioning is not long, it's not short, it's just kind of neutral, right? So what are we looking for in reality though? Well, one thing we're looking for is a concept called the flip. Okay, the flip means, let's say you're looking at the report, and remember, this is slightly lagged data, right? Because we get the report on Friday. Don't forget Friday at, when there's not a holiday, Friday it's usually at 3:30 p.m., right? And you're looking at Tuesday's positioning, right? So what's a flip? What do we mean by that? Well, basically a flip is is kind of like when you see, let me show you if I could show you the flip real quick. Okay, so here's kind of a flip here. So you see how here they were extremely short the US dollar, right? But why do you want to know this? Well, okay, for example, here they're negative 2,000 positions short, right? But then the next week, look at that, they added. Now they're 6,000 negative short. They are selling the hell out of this thing. And now down here, they're 13,000 short positions, right? So I guess if you're selling the US dollar, you could follow them. That's one kind of way to look at the report, right? But when you start to see this, like here they were short 14,000 US dollar positionings, but then the next week, boom, now they're short 9,000. That means they just closed 5,000 contracts. Keep in mind, the only way you get on this report is if you hold a position of like 250 contracts. For example, if you're trading the euro and you're making, I don't know, $10 a pip, these guys are making, 2,500. They got 250 contracts on the euro, millions of dollars most likely. So when they close positions, they cannot close it like me and you in and out in a day. No, they got to close them slowly, over a period of time. So that's why the report shows it. So when you see them go from 13,000 short to 9,000 short, you know, you gotta say, okay, well that's a pretty big difference there. I want to be aware of that. Or if you, so here's a flip, right? This is what I mean by a flip. Now remember the commercials, they're hedgers, so they're always going to be different than the speculators. Keep that in mind. Um, but see here they were short, right? But then all of a sudden, and the small specs, I really don't pay attention to the yellow ones, the little guys, because they're just retail traders, like most of us. But these guys you want to pay attention to. See how here they were really, really. Let me see here. So here they were short or kind of like neutral. I mean, negative 1,000, negative 2,000 is not like a gigantic short position, but it's still a little bit of a short, right? But then you see the flip. And then the week out, this is the flip. So when it goes from negative past the zero line up to positive, that means they're getting long, right? So here they're 7,000 long. Here they're 11,000 long. Here they're 16,000 long. See how it's growing? 19,000 longs, uh, 23,000 longs, and look what the market did. It it actually changed a trend. So does this report does this report show you trend changes? It can. I mean, it's not the holy grail. No fundamental data is going to give you, the holy grail of trading, whatever. But it's definitely something you want to pay attention to. Here's another example. So here is, well, let's look at another one. Let's look at Bitcoin, right? We'll look at that. Okay, so here's Bitcoin, right? So Bitcoin, oh, here's a flip. So see here they were short, right? Short, 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 short positioning, short, starting to get neutral, and then boom, they flip to positive. You kind of want to know this stuff because if you know where the smart money is positioned in the market, it kind of helps you determine, you know, what side of the market you may want to take. Now that doesn't mean you don't you necessarily have to follow them. They could be wrong. But usually the non-commercials are pretty good at because they're the ones pushing the market basically is what it's all about, right? Where's another one here? So for instance, let's look at gold maybe. So like gold, they're usually pretty long, right? But you could also see profit taking in this report. Like if you see they're really long here, 300,000 positions long, and then they cut that to like half, 150,000 positions long, either one or two things are happening. They're closing positions for profit taking, or maybe to for another reason, right? Possibly a change in trend. So keep that in mind. Here's another example. This one is this one's corn. Not that everyone watches the grains. I watch them sometimes. Again, I'm more of an index trader, S&P 500, Nasdaq, and Russell, but I watch all the markets. Um, but just to show you an example, so like see here, they're really short, right? So if I see this report and I see them go neutral, and then I see them all of a sudden go from neutral to boom, 84,000 long positions, I know something happened because I caught the flip. You see what I'm saying? I caught the flip. So now I say to myself, okay, does this mean we're beginning a new uptrend? Could it be a early trend change sign, right? Because if it is, well, then I might want to take a risk and jump on board if I'm trading the grains, right? Um, same thing on the in. Okay, and then as you see, they slowly started a new uptrend. Although corn seasonally rises in the fall, anyways. But as you see, they're seasonally taking advantage of this here, 100,000, and then they're loading up, right? And they're loading and they're loading, and the market rises, right? So this is one way you could use the report. But if you're an index trader, which is what I focus on the most, I like to know where they're positioning themselves in the indexes, So if I'm an S&P trader, right, I see them short, what's going on, right? Why are they increasing shorts? 27,000 contracts short, 70,000 contracts short, 122,000 contracts short. Yet they're selling in to a rally, but the market continues to rally. Interesting. Reverse psychology, right? We'll talk more about that in the final video. But for now, again, just wanted everyone to understand that we'll talk strategies in the last video, but just want to have everyone understand that for now, you want to pay attention to the non-commercials or the large speculators. That's the one that influences the market the most. And no matter what you're trading, again, even if you're a Forex trader, this is the euro. If you see them go from negative 24, if you see them short, right, and you're following these institutional traders, and you see them short at negative 61,000 contracts, you see them go to neutral the next week to negative 2,000, something in your mind should say, okay, you know what? Something either fundamentally has changed or something's going on. I don't know. I'm not saying the smart money, knows something I don't. Maybe they do, maybe they don't. But the bottom line is, if they make a big change, it's going to influence the market most of the time. So if I see large speculators, the blue, go from negative 2,000 to positive 58,000, I'm going to definitely take that into consideration before I make my next trade. I will definitely consider, should I be long this market or should I be short this market? Should I go against the grain by shorting here, even though they just, added 50, 80,000 long positions, or should I try and short against them? Should I go against them? Should I trend follow? Should I maybe join the party and go along with them? It's up to you how you use this data. But as long as you understand that it's a tool, okay, it's a tool that you can use to hopefully benefit your trading. So I hope that helps some of you who are new to the COT. In the final video, we'll talk about strategies and trade examples, okay? Um, so that's about it for this video. If you like the video, feel free to like, subscribe, put your comments below. Look forward to seeing everyone in the next one. And as always, my friends, trade what you see on the charts, trade well.